Hello guys, my name is Oluwole Godwin and welcome to MOG Economics. Today we shall be talking about tax system. What's a tax system? A tax system is simply the way by which the government of a country administers and collects its taxes. Alright, so what then is a tax? A tax is a compulsory levy imposed by the government of a country, okay, on its citizens or goods and services. Alright, so that's what taxes mean. Everybody pays tax, whether direct tax or indirect tax, and all of that. All right. What's it? How do we know the tax system in the country? Okay, so how do you know the tax system in the country? We have types of tax system and types of tax systems, and there are basically three. Okay, so we have the progressive tax system, then we have the regressive tax system, and then we have the proportional tax system. Okay, so what makes us know whether a tax system is progressive, regressive, and all of that? Okay, so we need to consider what we call the tax rate. Okay, the tax rate, and the tax rate is otherwise named the average tax rate. Okay, so the average tax rate is simply the amount that an individual pays in taxes, okay, divided by the income of the individual or the tax base, okay, then times 100/1. Okay, so that's what average tax rate is. Now, this is the formula that determines the tax system that is practiced in a country. Okay, there is also a related concept to average tax rate, which is called the marginal tax rate. The marginal tax rate. So marginal tax rate is talking about the change in taxes that an individual pays, okay, from a change in tax base. Now, what is a tax base really? Okay, a tax base is the object of taxation. A tax base is simply what is being taxed. Okay, so it might be the income of a consumer, it might be the wealth of a consumer, as the case may be, or other things that might be the object of taxation. Okay, so we now have the marginal tax rate. Now is the change in taxes divided by the change in tax base. In other words, change in taxes divided by the change in the object of taxation times 100/1. In this video, we shall be talking about tax systems. Okay, we're talking about progressive taxes, regressive taxes, proportional taxes, then how to calculate them, how to determine if the tax system in a country, okay, or if the taxes paid by a given individual is progressive, regressive, or proportional, and so on and so forth. Okay, let's go into the very first tax system, which is called the progressive tax system. Okay, so what is the progressive tax system? A tax system is said to be progressive if an individual pays more in taxes as his income rises, or as his or her income rises. Okay, so for the purpose of this lesson, we shall assume that income is the tax base. Okay, so we are not talking about wealth, we are not talking about other things, just income. All right, so when we say a tax rate is progressive, we simply mean that as an individual earns more, okay, he pays more in taxes, or as an individual earns less, he pays less in taxes. Now, let me reiterate again that it is not the amount of the tax itself that determines whether a tax system is progressive or not. It is the average tax rate. So we are going to visit an example now and then see how it all works. We have an example here. Mr. Keynes initially earned 100,000 naira and paid 10,000 naira in taxes. His income rose to 150,000 naira and he now pays 30,000 naira in taxes. Determine the tax system. Okay, so this is how to solve the problem. Average tax rate is tax over tax base times 100/1. So what we need to do now is to find his average tax rate at his initial income, that is at 100,000 naira, and then find the average tax rate when his income rose to 150,000 naira, and then compare. Okay, so when his income, okay, so we can just call this ATR1. Okay, average tax rate, the first one. Okay, so the first tax he was paying was 10,000 naira. So we have 10,000 naira divided by the first tax base was 100,000 naira. Okay, so that's what we are taxing, object of taxation, times 100/1. Okay, so this gives us 10%. 10%. Okay, so his second ATR, when his income rose, okay, so he now pays 30,000 naira in taxes. 30,000 naira divided by 150,000 naira, then times 100/1. Okay, so this gives us 20%. Alright, so Mr. King's tax rate has risen from 10% to 20%. Therefore, this is a progressive tax system. Okay, so the higher the income, the higher the tax rate. Okay, so we have this tax is progressive. Okay, so we have progressive so this is a progressive tax system. So this is the graph of Mr. Ken's tax system. So the higher the income from 100,000, so the income is measured in thousand, so 150,000. We discovered that the higher the tax rate. Okay, so the curve is upward sloping, which is telling us that this is a progressive tax system. All right, so after this example, let us move into what is called a regressive tax system. Okay, a regressive tax system is simply a tax system in which an increase in the income of an individual or an increase in the tax base leads to less amounts paid in taxes. Okay, it leads to less amounts paid in taxes. So when I say less amounts paid in taxes, that is, I mean a lower average tax rate. Okay, so a tax system is regressive when there is a higher income, or there is an increase in the tax base, and then there is a lower tax rate, and vice versa. Okay, so vice versa simply means that income falls and then the average tax rate rises. Okay, that sounds somehow okay, but that is exactly what it is. When the income falls, okay, the tax rate rises, which means the low income earners get to pay more in taxes for the regressive tax system. Okay, so let us start an example and then solve and see what is going to happen. We have a new example. Miss Eniola earned 150,000 naira and paid 50,000 naira in taxes. She is required to pay 70,000 naira now as her income rose to 250,000 naira. Determine the tax system. So what are we going to do? Average tax rates equals this. So we will get the average tax rate, the first one when our income was 150, and then the second one when our income has risen. So okay, so the first one, which is ATR1, equals what was the first tax she was paying? She was paying 50,000 naira. 50,000 naira, okay. And her tax base then was 150,000 naira. 150,000 naira. Then multiplied by 100 over 1. So this gives us 33.33%. Okay. So second ATR equals what's our tax now? 70,000 naira. 70,000 naira divided by then 250,000 naira, okay, then multiplied by 100 over 1. Okay, so this gives us 28%. This gives us 28%. Okay, so this was our initial tax rate, 33.33, and this is our new tax rate, 28%, which means there is a fall in our tax rates. Okay, there's a fall in average tax rate. Now, there's something important to note, that our taxes rose in absolute income to 70,000 naira. Okay, so we do not judge the tax system by the increase in the taxes absolutely. Okay, so we do not judge it by that. So we judge it by the tax rates. Though our taxes in absolute value rose from 50,000 to 70,000 naira, that does not determine that the tax is progressive. Okay, so what we need to realize is the tax rate. Okay, so the tax rate has fallen in spite of our increase in income, and that means this tax system is regressive. She gets to pay more, she gets to pay less in taxes when her income rises. Okay, so the other way around is the fact that an individual gets to pay high amount of taxes. Okay, or she gets an individual gets to pay more in taxes when the income falls. Okay, so when we have scenarios like that, we are talking about the regressive tax system. I think it's a way to encourage individuals to be high income earners and so on and so forth. So now let us draw the graph of this tax system and see. This is the graph for Miss Eniola's tax system. Okay, the graph is downward sloping, which simply means that she is paying less in taxes as her income increases. Okay, or she is paying more in taxes as her income decreases. Now let us move into the very last tax system, which is the proportional tax system. Okay, so we say a tax system is proportional if an individual gets to pay the same amount of tax rates irrespective of the income. Okay, so we have low income earners, high income earners paying the same percentage of their income. So now I'm not saying the same amount of income, okay, the same percentage. Okay, so let's say 5%. Okay, so an individual gets to pay 5%. A 5,000 naira earner pays 5%. A 1 million naira pays 5%. Okay, so that is what we are trying to say. We are talking about proportional tax system. So let's set an example to see what we're talking about. We have our third example. Mr. Matthew earns 300,000 naira and pays 30,000 naira in taxes. He is required to pay 28,000 naira now that his income fell to 280,000 naira. Now determine the tax system. So we have our normal formula. ATR is this. So we calculate the first ATR. Okay, ATR 1. So it was paying 30,000 naira in taxes before, 30,000 naira. When his income was 300,000 naira. Okay, so the tax rate here is 10%. Okay, so now the second ATL, Mr. Matthews now pays 28,000 naira in taxes, 28,000 naira. Okay, when his income fell to 280,000 naira. Okay, so here it is still 10%. Alright, in spite of the fact that in absolute value, his taxes reduced from 30,000 naira to 28,000 naira, this tax system is still proportional because the average tax rate is the same. The average tax rate did not change. Alright, so you have 10% and 10%. Okay, so now let's depict this on a graph. Here we go. We have a perfectly horizontal curve, okay, to denote proportional tax system. Okay, so this is what we have at 280,000 naira. This is income measured in thousand. It was paying 10%, okay, and then at 300,000 naira it was as well paying 10%. Okay, income fell, okay, as well paying 10%. All right, so because the curve is a perfectly horizontal curve, okay, so we say that the tax system here is proportional. That is, irrespective of the income that Mr. Matthew earns, he still gets to pay the same average tax rate. Okay, so the summary of today's class. Okay, we talked about the tax system, taxes, and so on and so forth. And then the most important thing in determining, okay, the tax system that a particular country is practicing is the average tax rate. Okay, so we do not need to get confused, okay, concerning the absolute taxes. We don't really have business with the absolute taxes. We only have business with what the average tax rates mean, which is otherwise known as tax rate alone. Okay, so and then we have three type of tax system. Okay, tax system, three types of tax systems: the progressive, regressive, and then the proportional tax systems. Okay, so in case you have any question concerning this video, please ensure to leave your comments. Okay, ensure to leave your questions behind in the comment section, okay, under the video, and remember to like and subscribe to our channel. Thank you very much for watching. See you next time.